to the oil sector. Nigeria faces a growing economic crisis as Brent crude prices fall below $60 per barrel. This is threatening the 2025 federal budget and straining foreign exchange reserves. A budget assumption of 75 barrels per day, that's what we put in the budget, and 2.06 million barrels per day production now appears absolutely unrealistic, with oil averaging $59.25, and production, of course, is also lagging behind about 10%. It's down to 1.7 million barrels per day. Recent estimates up to 19.6 trillion naira is lost in revenue, pushing the fiscal deficit towards 30.79 trillion naira, more than double initial projections. Meanwhile, we have the naira that is also weakened. It has weakened past the 1,600 naira to the dollar, and that's stoking inflation and market anxiety despite early year reforms and $15.2 billion in net FX inflows. Analysts are warning that prolonged oil market weakness could undermine macroeconomic stability and the central bank's capacity to defend the currency. Yes, defend. Temitope Kolade, Associate Director, Oil and Gas Power at Andersen Nigeria, joins me now. And it's a pleasure to have you in, Temitope.
Thanks for having me. Good morning.
Right. Good morning to you. Let's have a picture of just how much Nigeria is losing as a result of these lower oil prices, and of course not being able to meet up with the budget assumption when it comes to production, daily production.
Yeah, the risks are quite high, and just like you said in your introductory statements, the estimate of the oil revenue shortfalls at the moment stands at about 19.6 trillion, and it's a risky path for Nigeria. Apparently, the budget estimates were not necessarily, realistic at the beginning of the year. If you think about some of the things that we started seeing even at the beginning of the year, from a volume of production point of view, we've suffered lots of losses in the past due to vandalism and all of that, and the issues of oil theft, and so it's all. It was close to obvious that even though the government was taking necessary steps to get us to producing as much as 2,000 or 2 million barrels per day, we've not been able to attain that. And we've not been able to attain it till today. So that's on the one side. And so when you then see the global tensions and the sort of stance that the U.S. government is taking with respect to the demands for oil coming from Iran, or whether it's the trade war with China that is then impacting on oil price, it becomes even more challenging for Nigeria from a fiscal point of view to attain its goal when you look at the fact that now oil is selling per barrel for less than $60. So it's a dire one for Nigeria, and there is the need for some very drastic measures to get us out of this sort of plunge that we're getting into.
So, it's safe to say budget assumptions were unrealistic, both in terms of production, that's output, and oil prices.
Apparently.
All right, so it's a double whammy for us, right? Lower production, lower oil prices. Is there any way we can remedy this situation? Is there anything here in Nigeria that we can do to sort of plug the deficits and the effects this will have?
Apparently, and we've always had solutions. The question is whether there is the will of the government to drive those solutions home. Right. If you think about it, we have wasting assets, as it were, today in Nigeria. We've also been hearing so much about the possibility of privatizing an NPCL, for instance, and we see maybe some moves with the new management of the NPCL to see how it can be commercialized. And so you then see government taking some backseat in the operations of that company, and then we get private sector participation. And maybe there are other wasting assets, apparently, that the government needs to let go so that funds can get into the system, and then we begin to get there. But more importantly is the will to even get things going. When you think about the spending plan of the government, it's important that waste is dealt with, that we also block leakages. And that's something that is possible with ensuring that the right processes are digitalized, and then you have situations where there are proper controls such that you don't just say you're collecting taxes, whereas you have some loopholes right there that is just wasting away. So there is the need to scale digital tax compliance and broaden the VAT coverage, for instance. There are a couple of things to do, apparently. And one thing that we said we've done is that we wanted to take away subsidy, and that has happened. But the question today is how much gains have we been able to deliver with the gain? With the recovery from subsidy. So those are the issues, and I think that these things are very clear to those in government. It's just sometimes the willpower to drive things in the right direction.
Yeah. I mean, it's interesting while you were mentioning the solutions. It sounded pretty much like an echo of what IMF has been saying: broaden the tax net and also, subsidy removal. And we have followed all those guidelines. But there are also concerns around the deficit and where we turn to in finding a solution to, the aftermath of lower oil prices and lower production. More borrowing. What does that mean for us, especially with the deficit we already have on ground?
Well, I hope that the government will not go the way of borrowing. That's usually the way to go. Because some things would suffer for this sort of deficits. Salaries could suffer for it, but in the recent past, we've not had that in Nigeria. We've got capital projects also that sometimes could be delayed, and that's almost apparent with the situation of things going forward. You might think about social spending also as we maybe plan towards the next election, and people are already starting some sort of political activities. You might just expect that maybe the government would really not care so much about slowing down on those social spending, because they want that political buy-in from very many people to ensure that the ruling class continues to have their way. So there might be that resort to still trying to get things going by way of borrowing, but that's will definitely not give us a lasting solution to the issues that we have. But that's what it has been in the past. Maybe there could be some very strong points to ensure that we monetize some assets that are wasting away, and maybe that will give some back to the government, and we'll be able to close those gaps, maybe.
Well, we'll come more to the solutions, and you have mentioned something quite important that I think Dele Alake is also looking into. But we'll talk after this break. We'll talk more about how this could impact the everyday Nigerian on the show here on Business Edge. Stay with us. You're still tuned into Business Edge. Of course, the conversation goes forward with Temitope Kolade, Associate Director, Oil and Gas and Power at Andersen Nigeria. Of course, we're talking lower oil prices, and while this means lower revenue for the government, even though 70 to 80% of that revenue is already being spent on debt service, what does this mean for the average Nigerian? Hearing this news of, oil prices are going down, Nigeria's revenue is dipping, how does this affect me?
Well, like we said earlier, as you can imagine, if the government resorts to maybe some better tax instruments and they want to increase VAT, for instance, it would mean that we're going to have to pay more VAT if no funds are coming from oil. Right, that's on the one side, and it means that, there could be some sort of inflation. There will be higher cost of living because the exchange rate, if it worsens beyond what we see today, it means that, because we are an import-dependent country, we'll continue to get some of these things from outside of Nigeria, and that could also heighten inflation. Already subsidy has been removed, and so the cushions that we could have gotten around transportation, school fees, and all of maybe rents could even go higher because the cost of producing certain things that are inputs for these various things would then would then go up again, right? And it could even lead to job losses if things are not well managed. But let's be optimistic that some way, from a geopolitical point of view, we'll get some rescue and the slowdown in the world just maybe a little below $60, being optimistic about it, and maybe the government would also reorganize its funding. What we also have heard is that the government, the Ministry of Finance, the Minister of Finance in particular, is also relooking the budget, and that would mean that they're shaping up things and seeing how they can, deal with, maybe there are some slacks that were in that budget that they will ensure that they cut down and maybe manage things better for everyone in Nigeria.
Right, so cost cutting. And I guess some Nigerians some of us were looking forward to lower oil prices, right, at the PMS prices, right, price at the pump. Do you think that potential relief, because we haven't seen that happen just yet, do you see that potential relief being wiped out by fears of inflation as a result of, all this? Or is that something to look forward
to? That's very much likely. But the good thing is that we have Dangote Refinery. So because Dangote Refinery is in the mix, we are not 100% import dependent when it comes to petroleum products. So it sort of balances things out for us. And as we see on the one side, the price being escalated in terms of exchange rate, it would mean that to the extent that we also depend on some imports for refined products, the gains that we seem to be getting will get lost somehow in the mix. So maybe it's moderation that we're going to get. Nobody should raise their hopes so much about the fact that oil prices are coming down, especially the refined products for that matter.
All right. You mentioned the exchange rate there, right? And with the exchange rate now around 1,600 to the dollar, which is well above the 1,500 to the dollar that the budget assumed. So many assumptions the budget apparently got wrong. Do you think the CBN can continue to defend the naira, and at what cost?
Well, for the most part, the difference that we've seen in the last couple of months are also sort of intentional, I would say. Intentional, but then they are not as realistic as they should be from the point of you just see things around portfolio investments as against real investments within the economy. Is it sustainable? Apparently not. But as much as the government is able to source for some foreign exchange from outside Nigeria, from export earnings, it would mean that they could continue to defend it. But again, we've seen that oil prices are going down. So where is that going to come from? I think that the way the CBN is going about it would have to be relooked. There has to be a manner in which we allow some market forces to prevail and manage the volatility as against just trying to peg things and improve the FX inflows, and that would come by way of just ensuring that there is confidence in the system, because some of the times you'll find that some of the losses that we experience within the market are more driven by sentiments and the loss of confidence within the market. If the government ensures that there is transparency and they continue in the path of clear reforms that is obvious to people, I think by that we'll be able to sustain the defense of the naira. But again, the best we can get is not so much about ensuring that it doesn't go down. It's just in managing how it goes down and managing how volatile that is.
All right, thank you so much for that. And I mean, we know that there's a larger discussion going on here that is driving or influencing oil prices. You know, what's happening in Saudi Arabia, Kazakhstan, Iran, and all of that in the middle. Nigeria is also a decent player, right, in the oil market. And, you know, one is questioning our voice at the table with these conversations. So given Nigeria's limited clout, right, in OPEC+, what are the country's diplomatic or strategic levers to protect its interests within the bloc?
Well, Nigeria does have some arguments. In the last couple of years, we've struggled with issues around oil theft, the fact that we've even been given certain quotas that we couldn't meet. And so if others are saying, you know what, we are not going to slow down, we could, as Nigeria, also say, you know what, we have reasons why we can also produce more. But that's dependent on how quickly we're able to fix our security issues, how we're able to fix our technical issues, and ensure that we have more rigs working, we have more production. If we have more volume, then maybe we could actually push more out. And then we have the possibility of also speaking to oil producers within the African bloc, like Angola and Mozambique, for instance, and ensure that we maybe form another group that has some sort of ability to negotiate from a place of strength. So those are possibilities that we could leverage also with
Oh, yeah. All right. I mean, it looks like network is allowing us to tie our conversation together neatly. Kolade, are you there? No. I mean, but
yes, I am.
Oh, great. Okay. So, I mean, final question. Oil prices dipping, production dipping, FX shaky, you know, is on the line. CBN's intervention and foreign reserves is also on the line. What is all this signaling to the foreign investor?
Well, the foreign investors or investors at large taking a position of being cautious. But one thing that Nigeria must do as a government at this point is to ensure some policy consistency, right, and ensure that we deal with the issue of security in the land. As long as we're able to manage those perceptions around those issues and, of course, what people meet on the ground, we'll be able to deal with the issues appropriately, and then we'll get investors coming into Nigeria. But then we must ensure that whatever we're doing with respect to foreign exchange liberalization is backed with proper supply guarantees. And of course, we must ensure that we have clarity on our fiscal policies and ensure that there is sanctity of contract. That's one thing that is very important for every investor that wants to come into Nigeria. If you're able to deal with that, we're able to boost the confidence of investors to come into Nigeria to come and do business.
All right, Temitope Kolade, Associate Director, Oil, Gas and Power at Andersen Nigeria. Thank you for your input to the conversation.